Hey guys, welcome back to Valareso Capital. On today's video, we're gonna cover the most important tools of my trading system. So this video is gonna be the first video of a series of videos in which I'm gonna cover all of the essential tools that I use for my trading business. So make sure to like and subscribe so that way you can see all of the series of videos in which I'm gonna cover things like the 8 exponential moving average, 21 exponential moving average, 30 daily moving average, 50 daily moving average, 200 daily. We're gonna go through the swing levels. We're gonna take a look at Fibonacci. Then we're gonna jump into my indicators such as the trend oscillator, the TTM squeeze. So we're gonna cover a lot of information in this series of videos. So make sure to also turn on the bell notification so that you can receive the updates as soon as I release a new video. So once again, welcome guys to the channel. For this particular video, we're gonna cover the 8 exponential moving average, which is one of the most important moving averages in my trading system. Now, let's start from the top. So what is the primary purpose of the 8 exponential moving average? So the primary purpose of the 8 exponential moving average is going to be to identify the short-term trend for the stock that you want to trade. So that's really important for us to understand that we're looking at the short-term trend of the stock that we want to trade. So for this example, I'm going to be using TradingView and I'm going to be using the replay system that they have so that we can actually analyze the price action with a full animation of the ticker symbols that I'm gonna share with you. So let's start here with Shopify. So let me just hit play and we can watch what is the interaction between Shopify and that 8 exponential moving average. So right here you can see that this in real time that Shopify starts to get rejected at that 8 exponential moving average. And as soon that 8 exponential moving average act as resistance, you can see that the price starts to move to the downside. However, as soon as price starts to reclaim that 8 exponential moving average and that 8 exponential moving average starts to act as support, then we can start to see that Shopify is now moving to the upside, and now the short term trend for that move starts to go to the upside, and then we can see the Shopify end up making a new high at this level. So that's actually really important, and that's the primary purpose of the 8 exponential moving average. So now let's continue here and let's start to understand what is another very important aspect of the 8 exponential moving average, and that's gonna be that the 8 exponential moving average act as support or resistance for a couple of days, or it can even act as support or resistance for a couple of weeks. And now the very important thing about the 8 exponential moving average is that when the price breaks the 8 exponential moving average, it tends to be the first flag that anticipates a short-term pullback or a rally into the next level of support and resistance. And for this example, we're going to take a look at Tesla. So let me once again just hit the play button right here, and we're going to start to analyze the price action between the 8 exponential moving average and Tesla. And what is really important with the 8 exponential moving average and Tesla is that as soon as it starts to get a little bit rejected here, you can see that when the price broke right here in this candle, it started to move basically very strongly to the downside. And you can see that this trend lasted for a couple of days, even a couple of weeks. And as long as Tesla continues to close below that 8 exponential moving average, then the price continued to move to the downside. However, it is really interesting to see that as soon as Tesla reclaimed that 8 exponential moving average, then price found a little bit of support and actually make a really strong move to the upside. You can see that the move ended right here, and we basically came all the way back to these levels. But it all started when Tesla started to find a little bit of support at that 8 exponential moving average. So that's something actually really interesting to understand. Now, if we continue to move forward, then the question arises: why does the 8 exponential moving average act such as a fast, responsive moving average? And the answer is really simple. It's because the in comparison with in contrast with the simple daily moving average, the exponential moving average actually use something that is called the exponential smoothing factor. So what is the exponential smoothing factor? Basically, the exponential smoothing factor is going to be the percentage that is going to be weighted to the most recent price action. And as you can see right here, the exponential smoothing factor formula is the following. You can see that the exponential smoothing factor is going to be equal to 2 over x plus 1, in which x is the number of periods of the moving average. So in this case, the number of periods of the moving average is going to be 8 because we're calculating the 8th exponential moving average. And when we go through the formula, we can see that we actually get 0.2022. Now, this is going to be represented as a percentage. Now, that means that the 8th exponential moving average gives about 22.22% more weight to the most recent price action. That most recent price action is going to be that daily price action, the most recent daily price action. And then the remaining weighting is going to be distributed equally to the previous 7 days. So that's why the 8th exponential moving average is such a responsive moving average, right? Because if you were using just the simple daily 8 moving average, then you wouldn't get this fast response when it comes to price action. So if we continue to move forward here, we can ask ourselves, so what is the easiest way to use the 8 exponential moving average? And the reality is that the easiest way to use the 8th exponential moving average is just to understand that the 8th exponential moving average is not necessarily a perfect point or a perfect level in the chart, but is most used as a line in the sand for the most recent price action, which means that as long as the price is below, then the short-term path of least resistance is to the downside, as we saw in the example with Tesla. And then the opposite is true. When the price is above it, then the path of least resistance is going to be to the upside. So now let's take a look at another example, which is going to be with AEHR. So let's just hit play here so we can start to unravel what is going to happen with the price action. And you can see that the price action is going higher. But as soon as the price action in AEHR starts to find a little bit of resistance and a little bit of rejection, you can see that now the price is starting to struggle at this line in the sand. So as long as this line in the sand starts to act as resistance, then we're going to see that the path of this resistance all of a sudden is to the downside. And you can see that we start to get a lot of rejection for the price, and the price starts to drop lower. Now, how low can it go? We don't know, but as soon as price reclaim that 8 exponential moving average, you can see that we move pretty quickly to the upside in AEHR. So that's actually pretty important, and you can see that we actually even found a little bit of support in the price action. So that's actually pretty interesting, right? You can see that we find some support in the price action right here, and then basically we had a really strong move to the upside. So as you can see that how the price starts to unravel as soon as we get those moves above or below that 8 exponential moving average, you can actually see that it is indeed a line in the sand for the price. Now, what is really interesting is that if we combine price structure with the 8 exponential moving average, now it can turn into a really high probability short-term roadmap to follow the trend and stay in the trend as long as the price continues to close below it or above it. And for that example, we're going to use the Dixie, which is the ETF for the dollar. So let's just hit play here so we can start to see a little bit of how the price action acts. And we can see right here that we have a clear level of support right here. So that's clear price. There's a clear level for price. But as soon as the price starts to drop below that level, which is what we're seeing right now, you can see that price combined with that 8 exponential moving average can serve as a roadmap that tells us that yes, we broke a structure, but guess what? As long as we continue to close below this 8 exponential moving average, then you better hold up to your trade, because most likely we are going to continue to see more downside in this market. And it's really interesting to see how this 8 exponential moving average it is not an exact level, right? Because sometimes price can close above it, but as long as the price consistently closes below it, it can act as a really good roadmap for the price to follow. And you can see that we just continue to plunge here in the dollar, which is the most recent price action that we actually have. So that's also really interesting to understand that when we combine the price action with some price structure and that 8 exponential moving average, then we can get a really nice and clean roadmap for the trade. And then finally, now that we understand how the 8 exponential moving average actually works here, let's go through a full example. And in this full example, we're going to go through TLT and we're going to do our best to annotate all the most important information as we go in the trend of the 8 exponential moving average. So let's just jump right here. Let's just hit play and let's see where this takes us, right? So as you can see right here, you can see that price is basically trading. You can see that here, right here in this candle, we had a really strong move to the downside. We just can color that red, and you can see that price got pretty rejected here, and we start to see a really strong move to the downside. As we continue to see that move to the downside, you can see that now we are starting to see some more resistance, as we saw in some other examples, right at that 8 exponential moving average. And then you can see that 8 exponential moving average continue to push price to the downside. So that's actually pretty interesting. And then you can see that we had a really strong drop in the TLT, and things basically do not change until we get some different kind of price action, right? So you can see that we continue to move to the downside. There's basically no stopping, and there's no reason to buy this market until we get some really nice close above this 8 exponential moving average. So you can see that here we're starting to try. Then of course, let me just paint that green. And you can see that here we're starting to get more and more price action that is actually starting to move to the upside. So this is actually pretty interesting, right? Because we are now seeing that as soon as we reclaim that 8 exponential moving average, now the price has like the path of this resistance continues to be to the upside. So that's actually pretty interesting, and it's actually a pretty strong concept, because now we have an understanding of where price might go just based on this moving average. And you can see right here at these levels that we start to lose that 8 exponential moving average once again, and then prices start to move to the downside. And then as soon as prices start to reclaim it, you can see that we start to move to the upside. We find a little bit of support. So that's actually pretty interesting. So yeah, and that's basically it. So it's actually pretty fun just to go through these examples. Just look at the sample once again. Look at the price action of the example, and then you actually realize that, damn, this is actually a pretty strong indicator, and it's such a simple indicator, right? So I fully recommend that you start to incorporate this 8 exponential moving average into your charting. I think it's such an amazing and powerful tool, and I don't think that people give the 8 exponential moving average the full attention that it actually requires. Because when you start to backtest it, you will see that most often than not, when we have an established trend, that 8 exponential moving average tends to act as support or resistance in a very high probability fashion. So once again, thank you so much guys for watching this video. I hope this was really helpful for you guys. It has been definitely helpful for me. I remember when I first started trading, there are not a lot of people talking about the real basic things, right? A lot of people talk about like super complicated stuff, a lot of macro stuff and everything, but no many people take the time to actually explain such a simple concept like the 8 exponential moving average. So once again, thank you so much guys for watching, and make sure to stay tuned in the channel, because I'm going to be sharing more videos. The next video is going to be in the 21 exponential moving average, and we're going to go through all the things that I use in my system so that you can actually incorporate a lot of those things to your system as well. So once again, thank you guys, and take care. Peace. Bye bye.